Good day, everyone. You're welcome to this week's Business and Investment Tips program, a production of RCCG Christ Church Radio with Ayodeji Ebo, an investment professional. This week focuses on Nigeria's Q4 and full year 2022 GDP report. Last week, the National Bureau of Statistics (NBS) published Nigeria's fourth quarter and full year gross domestic product (GDP) numbers for 2022. The Nigerian economy grew for the 8th consecutive quarter since it exited its recession in 2020. Real GDP rose by 3.52% year-on-year, that is Q4 2022 versus Q4 2021, higher than the growth of 2.25% year-on-year recorded in Q3 2022. In the full year, GDP was up 3.1% year-on-year, 0.3% lower than the growth of 3.4% recorded in 2021. The accelerated growth in the fourth quarter was mainly due to the improved performances of the services sector, telecommunications, financial, and insurance, as well as the agricultural sector. The agricultural sector proved resilient, posting a 2.05% growth despite flooding and insecurity incidences that rocked the country in this year. GDP tracks how an economy performs and measures the value of all final goods and services produced in an economy in a given period, usually a quarter or a year. Real GDP reflects the actual value of goods and services produced without the influence of price movements. Simply put, the GDP of a sector can be affected by both the volume of goods and services produced and the respective prices. Nevertheless, what's important is the increase in goods and services produced rather than the price increases. Nigeria's GDP report captures 19 sectors, but only 5 sectors account for 71.8% of the total activities in the economy. These are agriculture 25.2%, ICT 16.3%, trade, wholesale and retail 15.8%, manufacturing 8.8%, and mining and quarrying 5.8%. The non-oil sector, which accounts for 94.3% of Nigeria's GDP in Q4 2022 and 95.6% in FY 2022, has been the major driver of growth since the country exited its recession in Q4 2020. The non-oil sector grew by 4.4% year-on-year in Q4 2022, up from 4.3% year-on-year growth in Q3 2022. Ultimately, the non-oil sector grew by 4.8% in 2022, stronger than the 4.4% achieved in 2021. On the other hand, improved security efforts started to pay off in the oil sector as oil production volumes increased to 1.34 million barrels per day from 1.2 million barrels per day in the third quarter. In spite of this, volumes remained lower than 1.5 million barrels per day achieved in Q4 2021. Consequently, the sector recorded its 8th consecutive contraction of minus 13.4% as against minus 22.6% in Q3 2022 and minus 8.1% in Q4 2021. Overall, the oil sector declined by minus 19.2% in 2022 versus minus 8.3% in 2021. Based on the contribution of sectors to the GDP, the services sector picked up momentum, 56.2% in Q4 2022 versus 52% in Q3 2022. While the contribution of the agricultural sector declined 26.5% in Q4 2022 versus 29.6% in Q3 2022, and industries 19.2% in Q4 2022 versus 18.3% in Q3 2022. The growth rate in the agricultural sector rose by 2.1% from 1.3% in Q3 2022, though the services sector declined to 5.7% in Q4 2022 from 7% in Q3 2022. Meanwhile, industries contracted for the 7th straight quarter, though at a much softer pace, giving a negative growth of minus 0.9% in Q4 2022 compared to a contraction of minus 8% in Q3 2022. Our takeaways. 1. Remarkably, 18 out of the 19 sectors expanded in Q4 2022, save for mining and quarrying sector, minus 11.4%, which contracted for the 8th consecutive quarter. 2. The depressed growth in the crude, petroleum, and natural gas sector can be attributed to the low crude oil production due to theft, prolonged operational and maintenance issues, as well as divestments of international oil companies (IOCs). 3. Growth in the ICT sector remained strong at 10.4% in Q4 2022 on the back of increased investments in 5G, improved data revenue, increased subscriber base, and improved activities in the payment service bank segment by the two giant telcos, MTN Nigeria and Airtel Africa. 4. There was a rebound in the manufacturing sector as growth came in at 2.8% following the contraction of minus 1.9% in the previous quarter. We attribute the rebound in the sector to a softening in the naira depreciation. 5. The trade sector sustained its positive performance for the 7th consecutive quarter, though growth softened to 4.5% year-on-year in Q4 2022 from 5.08% in Q3 2022 amid FX illiquidity and persistent inflationary pressures, both global and domestic. In 2023, we expect Nigeria's GDP to sustain its positive growth path, though GDP is projected to grow at sub 3%. Private consumption will slow as elevated inflation of over 20% will continue to erode household purchasing power. Similarly, private investments will remain subdued given the tighter monetary conditions, ongoing investor concerns about Nigeria's economic and security situation, and the post-election uncertainties. However, we expect more government spending, majorly funded by borrowings. Thank you for listening. Please join us same time next week for another interesting and insightful session. For questions, comments, and feedback, kindly forward to ebo.ayodeji@gmail.com or send an SMS to 070-8246-3747. Stay blessed.